What is going on, investors? Hopefully you guys are doing well out there. It is time for Friday. It is time for the weekend. And that means it's time for the Fang Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major Fang stocks this week. We heard from NVIDIA, the last of the major Fang stocks, to report their earnings. We'll look at the massive earnings revisions upwards and with that stock, and we'll also discuss there are actually a couple of these stocks that I actually think are in a buying zone. So we'll talk about that and more on today's show. But we better kick things off like we always do with Meta Platforms. Start of the week at $286 per share. End of the week, roughly flat. We'll call that $286 per share. Meta launching an AI model for coding called Code Llama. This very specific large language model is going to allow you to code in Python, C++, Java, PHP, all types of JavaScripts and other types of programming language. Boy, I wish this was around 10 years ago when I was doing a lot of coding on websites and things like that. I love Meta's plan here. Okay, now, are they going to make a bunch of money off of something like this? What's their grand plan as they're releasing more and more of these language models? I really like the route that they're going. They're starting to release these very narrow, coding language bots. We'll talk about here in a second. They're also going to roll out a kind of a speech to tech language box. I think what Meta is going to do is use this as their own personal R&D lab. They already have the reach. They already have the customers. We'll talk about Threads here in a second. I don't necessarily think that app's going to be wildly successful, but they have the ability to roll out these new products and get a lot of people signed up for them, and allowing the community, the open source community, to use these models. Yes, some people are going to take these models and compete products and make products that make money for them. But Meta is going to be able to see what some of these things are. And so I really like what they are doing. Now, I was absolutely critical of this company. I did not like the metaverse. I did not like the direction the company was going from an R&D spending perspective. And I think we can look at this time and see there just simply have not been any results there from a revenue perspective, from certainly a profit perspective. But the direction that the company is heading in with AI, look, I can disagree with a CEO on one thing and, again, praise them and say I like the direction they're going in here. The company also unveiling an all-in-one AI model for its AI speech-to-tech translations. I'm actually seeing a lot of use cases as it relates to customer service. So what a lot of companies are doing is, especially like multinational companies, what they are finding is they're going to be able to use AI to translate an incoming language. Let's say I'm in a call center, I'm working there, and I get a Spanish speaker sending me a question. Well, in the past, the call center might have had to hire a Spanish speaker or rely on relatively archaic kind of translation. These AIs are getting better and better. And so that's going to allow more use cases, faster communication, better customer service, and quite frankly, maybe dropping the language barrier that exists around the world. Meta could launch a Threads web version sometime this week. This is more or less a moot point. Here's what I want you guys to understand is Twitter and Elon Musk is very much like maybe former President Trump, and there's probably other figures out there. The media loves to dunk on Twitter. They love to dunk on Elon Musk. They love to dunk on Donald Trump. And I'm not saying those people don't deserve to get dunked on or they don't bring it on to themselves every once in a while. But just understand, the media loves to over-exaggerate things that happen to Elon and Trump and Twitter in general. At the end of the day, Twitter has changed its name. It's fired a lot of employees. It's changed some of the features. At the end of the day, Twitter or X or whatever you want to call it is cemented into society, at least from a social media perspective. And Meta's attempts, or really anyone's attempt, I don't think is going to have an impact on the company. Moving on to Apple. Start of the week at 175, drifted higher this week, up over 2% to finish the week at 178. Apple is the most under-owned large cap tech stock, believe it or not. That's according to Morgan Stanley. And Morgan Stanley is referring to direct ownership of Apple. So you actually own the ticker AAPL. Obviously, if you own Vanguard funds or S&P 500 broad index funds, technology funds, any of that type of stuff, you certainly have exposure to Apple. And maybe that's leading to one of the reasons why investors don't invest directly into Apple is because they already have exposure to it. It also could be telling us something psychologically about the valuation. There's just no real compelling reason to buy Apple over maybe like Tesla or NVIDIA or Microsoft or Google or even Meta. We can, and even Amazon, and really any of these other major FANG stocks. If we were to try to make a case to buy just one of these major FANG stocks today, and we could only buy one, which I think is kind of a stupid argument, but let's just make like we're going to do it right now. Apple, I think, would maybe come in last place. And so I can see why it's under-owned, but look, when a stock like this is under-owned and with the amount of money and the amount of R&D this company is doing, I think we have an opportunity here pretty soon with Apple to really turn the corner. And technically, the stock has also turned the corner. I think I had somebody complain about the fan spinning, so I just turned it off, just letting you guys know that. Moving on to Amazon, start of the week at $134 per share, down just fractionally to finish the week at $133 and some change. Disney is said to be in talk with Amazon about a strategic ESPN partnership. The two giants are in preliminary talks. I don't think I said that right, but it's a very difficult word to say. They're in talks to maybe potentially bring a streaming service of ESPN to Amazon, Amazon maybe being a strategic buyer. I do have some non-public information that I can't share here, but I would just say that the headline and the story of this article is likely pretty accurate. Now, the more surprising thing in here is ESPN is considering an eye-opening potential price for its streaming service to come in at $20 to $35 per month. So obviously they have the sports rights. They have all the NFL, NBA, baseball. They have hockey. They have an ESPN Plus, which is a cheaper one where they tend to, I think, show UFC and maybe some college sports on there. This is a difficult one because now you're going to have to go back to the NFL. You're probably going to have to go back to like the Masters golf tournament and those types of things and make sure that they're going to allow you to stream this on the new service. And so this is a complicated deal, $20 to $35 per month. When we get over to Netflix, I think that these types of prices are starting to make Netflix look like one of the greatest values in all of entertainment. And on top of that, the company's already profitable. I don't want to necessarily sing Netflix's praises at the moment, but Amazon partnering with ESPN certainly would be interesting. I actually think one of these companies, particularly Apple, Amazon, maybe Google, will absolutely end up with ESPN one day. Wholly outright. That's my prediction. iRobot is set for an October 12th new shareholder vote on a revised deal with Amazon. As you recall, Amazon agreed to acquire the robot vacuum maker that has a lot of IP that Amazon wants to use in their warehouse for the robots that are moving around inventory. I think they're going to sell a few vacuums at the same time. They're going to be able to cut marketing expenses and turn a marginally unprofitable company into one that more or less breaks even, maybe squeaks out a small profit. Amazon made an original purchase of iRobot, and over time they've had to renegotiate that deal down. My guess is the shareholders of iRobot will approve such revisions. Nielsen is prepared to include Amazon ratings on their Thursday night exclusive football game that the company shows on their Amazon Prime Video platform. This is obviously coming, I think we're just a couple of weeks away from the NFL season, and that certainly will drive eyeballs and attention to Amazon. Shipping wars. We noticed this last week. It was more or less a rumor, but now it is a fact. Amazon is restarting a service that competes with FedEx and UPS. Not so fast, though. You do have to actually sell products on Amazon. So you have to be essentially an Amazon Seller Central kind of professional seller, and then you're going to be able to ship packages through, let's say you have a Shopify, or you maybe sell things via social media or something like that. You're going to be able to ship through Amazon. I love this by Amazon. And this was the plan all along. It got delayed because of COVID and the surge that Amazon saw in their own business. They decided to put this to the back burner. I love this. They already have a business that from just a volume perspective is right up there with FedEx and UPS. And I think this is the next, billion-dollar company inside of Amazon, to be honest with you. Moving on to Netflix. Start the week at 405. The leading indicator of FANG is right here, is Netflix. Okay, so if FANG is going to make a reversal and move higher, Netflix is going to go first. And we see this stock, probably the best performer outside of Tesla, up over 2.5%, finished the week, $416 per share. Netflix builds momentum and gains as reports show. Subscriber momentum continues to roll on. This is something that we talked about. We saw that Disney Plus is doing price increases. I think Peacock, pretty much everybody is passing on a price increase. And it's not like Netflix hasn't either, but a lot of these other services were more or less kind of like on an entry level, like loss leading type of service price, like $4.99, $5.99. There's really no way these companies can make money at that pricing level. They're all going to have to continue to inch their pricing up into where Netflix is. And then that's just going to make Netflix look better. And this is a company with, plenty of cash on their balance sheet, and maybe not plenty of cash, not like the rest of these stocks, more or less, but they've got cash on their balance sheet and they've got abilities to borrow money if they need to. And on top of that, they're profitable. And so that's not the case with that's not the case with any other streamer other than Netflix. This company's in a very good position. Moving on to the story of the week, probably even the story of the year. That is NVIDIA Corporation. Started the week at $450 after reporting earnings and spiking up to a new 52-week high, over $500 per share. Shares slid today and yesterday to finish the week, still up about 2% at about $460 per share. NVIDIA rose, though, early in the week as Wall Street praises the guidance for the ages. So NVIDIA did it again. So they decided to beat and raise significantly not only their quarterly revenues this quarter, but they raised their guidance for the upcoming quarter well above expectations. I think it was about 30 or 40% higher than what most Wall Street analysts have. My guess is we'll be sitting here 3 months from now, and NVIDIA will be doing the same thing. They will be beating and raising. This is what happens when you are a monopoly. I heard some lady on CNBC talking about how, there's going to be all these chip companies that are going to catch up to NVIDIA. Yeah, well, no, they're not. That's not how the semiconductor business works. Just look at Intel, guys. Intel fell behind, and we're not trying to criticize Intel. We're just using it as an example here. Intel fell behind, particularly AMD, and you've seen what happens. Like, once you fall behind, you all of a sudden fall behind not just the current generation chip, but all these companies have 2 or 3, maybe even 4, maybe even 5 generations of chips that they're working on for the upcoming years ahead. And so if you fall behind essentially 2 generations. It's very hard to catch up. When we're talking about NVIDIA, they're making a very, very specialized AI data center GPU. There is nobody that is in the same ballpark that is doing what NVIDIA is doing. Now, some of you are very, very correctly saying, well, no, look at what Google is doing. That is correct. Google has their own TPU device. They partner with Broadcom on that. And look, that device is not available to the public other than through Google Cloud. So if I want to use Google Cloud, I might have access to that. But otherwise, that device is primarily used by Google internally, and Google internally has a lot of uses for it, and they don't necessarily want other companies and other startups necessarily using it. Now, a lot of you are also saying, well, AMD's got a product too. Yes, AMD is going to come with a product that is competitive to what NVIDIA has on the market right now. But NVIDIA has another product, the GH200, which is coming out here, I think, in the matter of months, sometime next year. that is going to make the AMD product not look as great. And so, yes, there's other competitive products on the market from Intel, and there's some smaller startups like Cerebras and maybe TensTorrent as well. No, NVIDIA is the Michael Jordan in his prime of AI data center GPUs. And to try to argue that Karl Malone or Tim Duncan or Shaq is all of a sudden going to not only overtake Michael Jordan, but become better than him in any time soon is a ridiculous argument, and just shows that there are literally analysts that get on paid financial news today that don't understand that NVIDIA is so far ahead of everybody else in terms of development that you can't catch up. You are not going to catch up. It doesn't mean there's not going to be competing products. It doesn't mean that I don't think NVIDIA's margins and the competition does help squeeze competition, squeeze margins in NVIDIA. But let's not kid ourselves. This company is the most dominant, and period. End of story. Just like Windows operating system on an x86 device, just like iPhone, iOS, or Android, there are dominant systems out there, and everybody else is a distant second place at best. And Wall Street is recognizing it. Okay, this is not a story, what I just told you. No, everybody knows this at this point. The stock is continuing to move higher from an EPS perspective. I actually think these EPS estimates are too low based on the research that I am doing. Revenue estimates obviously skyrocketing as well. Companies said they're going to do $16 billion. Well, they said they were going to do $11 billion. I think they did like $13 billion. My guess is next quarter for NVIDIA, you're at $17.5, maybe $18 billion. That means your fourth quarter is probably going to be close. I think you're going to be close to $20 billion by the end of this year. And then I think NVIDIA has a stretch where the growth rate quite isn't as rapid, but they hit a $20 billion run rate for maybe 3 or 4 consecutive quarters, giving you a company with revenue close to $100 billion. And then when you look at it from the EPS side, you're looking at maybe $15, maybe as high as $20 on the EPS side, which means if you have a $400 share price on this one, this thing's trading at like 20 to 25 times forward earnings. So it's actually not very richly valued. Moving on to Google. Start of the week at $128 per share. End of the week up about 1.4%. We'll call that 130. Google's AI counteroffensive is starting to take shape, and I believe this to be true as well. We've had some hype around Bard. I think we're going to get more hype around Gemini. The company knows they're going to have to generate something interesting. Now, I don't have this news story here. It didn't come across in a press release, but what I saw was Bing. Everybody was worried about Bing taking market share from Google and Google kind of falling on its face. No, that's not going to happen. Bing is not gaining market share from Google. In fact, it's maybe the opposite, that it's actually more people are starting to use Google. The company is spending billions of dollars on its AI-related infrastructure, including its own chip, a TPU that it is partnered with Broadcom to manufacture. This company, needless to say, very, very well positioned. I would expect very exciting things coming from Google here very soon. The company is also creeping into that music business. They're already there with YouTube and YouTube music and music videos and things like that, but they've started an AI incubator. That's not good news necessarily if you're an artist, with Universal Music. So YouTube and Universal are trying to think, well, if people are going to be making AI beats and making Kanye West sing without him having to sing, how do we get a piece of it? This is kind of the music business in a nutshell. You take an artist's work and now they're going to be able to make a computer kind of synthesize it. I mean, that stuff already kind of happens, but AI is going to take it to the next level. And guess who's going to want to cut? Universal, the studios, and also YouTube. Great deal if you're YouTube, probably a bad deal if you are a singer or a performer. Moving on to Microsoft. Start of the week at $318. This one also rebounded up about 1.3% to finish the week at $323 per share. ChatGPT can provide inaccurate recommendations for cancer treatment. That's a problem, but this underscores ChatGPT in general. It also underscores AI. What we're going to look at back on AI. There's all these like press releases and all this stuff that gets clicks and talks about how AI is going to take away all these jobs. AI is going to be, the end of humanity. AI is going to be a tool. AI is going to be a resource. So heaven forbid anybody has something serious happens to them with cancer, and I've witnessed it with my family. It's not something I'd wish on anybody, honestly. It's terrible, obviously. But ChatGPT or AI is going to become a tool. I think what this is also teaching us is that ChatGPT is not a killer app, okay? It does some things very well, but we opened things up with Meta launching a specific AI model for coding. Meta launching a specific AI model for speech-to-text translations. This is the direction AI is going. And so you can start to extrapolate what I say here on the channel. I have to be a little bit careful about kind of specific recommendations at this point. But here's how you need to start thinking about AI is the very specific narrow use cases. Where are those opportunities? What companies are going to go from zero revenue, very little revenue, and then they create a one-lane product that's a speech-to-text, that's maybe a coding product. Maybe it delivers for attorneys. Maybe it delivers for the insurance agencies. Maybe it does something for car dealerships. Find that. The idea that we're going to have these one-size-fit-all, ChatGPT kills Google, kills everything, that was a fantasy. That was always a fantasy. Not saying that ChatGPT isn't interesting, and I'm certainly not saying that Microsoft doesn't have some very interesting products in the works. But this idea that there'll be one app that tells you a story, that tells you a joke, that rewrites your blog, that codes your website, but also can give you an accurate cancer treatment diagnosis is insane. Maybe sometime in the future when the computer systems get even more and more accurate, more specifically, we are going to see specific medical AI language models. Those obviously already exist and are in the works and will continue to be perfected. Microsoft's purchase of Activision Blizzard likely to close in early October. Be very, very interesting when those revenues and those profit numbers hit Microsoft. We'll see how they're able to integrate that business and maybe eliminate some of those costs. Moving on to Tesla, start of the week at $224 per share. And I think there was some guy on YouTube last Friday that was telling you that this stock was set for a rebound, technically. Some of you guys look at the charts, which is literally just a chart of price, and for some reason you think this is voodoo. I get all kinds of really silly, really legitimately silly and ignorant comments on my YouTube channel. Probably the most of them are about just a price chart, how some of you guys literally ignore this. This would be like ignoring the price of a car or a house or the grocery bill or whatever, even the price of interest rates. That is all this is. And price can give you a lot of indication on where it's been and where it's going. And we told you, Tesla specifically was set for a rebound. And the shares of Tesla, the best performing stock, not surprised at all. I'm not surprised at all. Up over 6.34% on no real major news, to be honest with you. Tesla's supercharger business is seen growing to about $20 billion in revenue here very soon. Also should not be surprising if you've been following this channel. If you own a Tesla, I have two of them out here. I'm not a Tesla fanboy. If gas was $2 per gallon, I'd have my Mercedes SUV out here. The interior's nicer, and those cars are as safe, maybe even potentially safer than a Tesla. But with gas out here in California touching $5 per gallon, there's absolutely no way I pay that, considering there's a fat gas tax that's supposed to fix our roads. And if you see the quality of the roads out here in California, you know that the money is not being spent there. I'll get off my political soapbox, but the supercharger business, Tesla is going to win that. They're going to win the plug. They're going to win this EV race. All the other chargers are going to go bye-bye. This company is winning the EV race by a long shot. Now, they are approaching the Cybertruck rollout cautiously due to its unique design. However, if you have a Tesla Tesla car inside the app. They've been rolling out these, like they're trying to, like, it's almost like an affiliate model. They want me to like recommend people take test drives or maybe buy. That was already existing inside the Tesla app, but they're really trying to encourage you to, as a Tesla owner, to try to get somebody else to buy a Tesla or go test drive one or have interest in one. And one of the rewards, if I invite or recommend like 2 or 3 people to buy a Tesla, I would get invitation to the upcoming Cybertruck rollout. So we are going to have a delivery event, I would guess probably in the next 30 to 40 days as it relates to the Cybertruck, and that is going to be a pretty big deal for this company. There's going to be a lot of people lined up to buy that car, buy that truck, myself included. Tesla dipped earlier in the week on a report of lowered production target for its Germany factory. Initially, the company had a 5,000 per week kind of car target. That has now been reduced maybe to 4,350, maybe all the way down to about 4,000 cars, as the economy and interest rates in particular probably hurting sales of the car maker. Moving over to the technical segment of the show. This is when we invite Miss Cleo and we get our crystal ball and we predict the price action of stocks. When it, look, if you go, but you can go back and look, guys, look at what we've said about the S&P 500. Look at what we said about all of these stocks, and it's been relatively accurate. People sometimes give me flack about, oh, you sold Meta. Well, if you go back and look in my videos in January, I'm telling, and that's all the way down here. I'm telling you, the trend is reversed. You buy. A lot of people give me flack. Oh, well, you were bearish on NVIDIA. Go back and look at the NVIDIA videos on the Friday videos. I'm telling you, hey, fundamentally, I'm not super excited about this stock, but technically this is a buy. And so that is why we do this segment, guys. And we've been incredibly accurate with it. So if you want to pay attention and make some money, that is fine. If you want to sit around and cry in the comments about Miss Cleo appearing in the background, be my guest. The rest of you guys, I'd like to make you some money. Now, the S&P 500 has been making a series of higher highs, higher lows. We're back down into the middle of the channel. Those of you that have been following our technical analysis, these channels happen. I mean, we might as well just like get rid of the downtrend that we were in. We're more or less kind of looking here. We're not sure if that trend has materialized yet, but oftentimes in these channels, the middle is very much a reflection point. So it's very understandable that the S&P 500 kind of bounced off the middle of the channel. So we have a decision point. If we make a break below this middle area, absolutely you buy the S&P 500. Like, you have to do it. I don't know. I don't know if you have some other reason why you don't buy the S&P 500. I'd like to understand your system. Are you worried about what a Federal Reserve chairman is saying? Are you worried about interest rates? Look how that has gone for you over the past 12 months. You've got to create a system where it's a yes or a no. And that is what technical analysis allows you to do. You say, hey, if the S&P 500 breaks here, it's a buy. If we break up here to new highs, I'm not necessarily selling, but that is an area where you can sell. It's as easy as that. Don't make things any more complicated than they already are. Middles of the channel is a very understandable place where you either consolidate or you move to a new low. These are areas where you actually start to accumulate. That is the S&P 500. Moving over to Meta. Now, we have broken our longer term trend, or at least you could call it kind of the intermediate trend, since December of last year. Now, on Meta, we did not confirm a new high. When we look at Microsoft, when we look at Apple in particular, that stock confirmed a new high. That has me bullish about the S&P 500. We'll get to Apple here in a second. I think Meta is just taking a breather after, really going on one of the longest uptrends that we've seen in a very long time. You should have some support for shares exactly where it is. We've got our volume profile. There was a large amount of consolidation between the 250 to, we'll call it maybe 280 on shares. That's a natural spot to where the shares find support. For Meta, you would not want to see it break through this level. You break through that level. Obviously, if you want to accumulate these shares, you actually do want to see it break through these levels. I think a higher probability with Meta is you find support here and you actually move to a new higher high. That's what it's looking like to me. There's no reason to think that is not going to happen. Obviously, we'll see what materializes here very soon. Now, Apple, since 2021, was making a lower high, lower high, lower high, lower low, lower low, lower low, and then finally broke through more recently this year, broke to a new high. When Apple broke to a new high, you can go back to the videos. I don't delete them. I don't change them. What we tell you, you are going to get a back test to the highs. That is exactly what's happened. That's why when a stock breaks to new highs, don't have FOMO, don't run out and buy, relax, chill. Just understand that you break to new highs, you often back test to the highs, exactly like Apple is. Now, it looks like it wants to rebound here. I don't necessarily know if that's the formation we're going to go in, considering how much Apple moved. I mean, it moved like basically kind of like 50% off the lows. It actually wouldn't be even more surprising if the stock has slightly deeper pullback before resuming the uptrend. That is all something to be determined. It's nothing we can determine today, but when the stock broke to new highs, we told you that it was going to come back here and retest the previous highs, and that's exactly what happens. You're looking for a move higher, a break back up into the 180s, probably actually should be bought on a momentum basis with Apple, since you have the high probability of making a new high up into the $200 range. Amazon's in the weirdest spot probably out of all of these stocks. The vast majority of its consolidation range is still higher on the stock. For this stock to make a new higher high, not only does it have to push through that consolidation area, it has to then come all the way up to about $190, almost $200 per share. That's a steep move on these shares. So I'm not expecting that in the shorter term with Amazon, but it's finding this area more or less. It's trying to build a base where it's at. Pullbacks on Amazon, like pretty much all of these stocks, should be bought. We said at the top that Netflix is the leading indicator from a technical perspective. If you want to know where the rest of FANG could potentially be going, you need to follow Netflix. This is why it's in the FANG Stock Recap Show. I don't own this stock. I don't own any of these stocks, but it's very much worth monitoring each of them. And so the reason why we say that is look at when Netflix bottomed, okay? All of these other stocks, literally all of these other stocks, when did they bottom? They bottomed in October and November of 2022. Look at when Netflix bottomed. It actually bottomed well before that in April and May and June, and then started his uptrend. October, November is actually right here for most of these stocks. Netflix also started its resistance level. It had some resistance of consolidation up here in the $500 range, got rejected at this level. Well, guess what, guys? We are sitting on a level where you've been making higher lows, higher lows, higher lows, higher lows, almost to the dollar bill on Netflix since June of last year. Here we are right here. If you can't buy Netflix at this price, set a stop loss below the previous lows. So you're risking $10 to make a new high at over $545. So you're risking 10 to make 140. If you can't do that, or if you make excuses why that you can't do that because of Jerome Powell, because of NVIDIA, because of some other stock, or because of Disney or something like that, I actually don't think you're an investor. I actually don't think you have what it takes. We said this last week about Tesla. If you couldn't buy Tesla last week and you made all these excuses about whatever you wanted to make and you couldn't buy Tesla that is up 6% this week, I don't know what your strategy is. And I don't think you have one, okay? And so Netflix is a buy at this price. The stop loss is at 400 or 399 or 395 if you want to be a little conservative. You risk 20 to make a new high up at $500. It doesn't get any simpler than that. NVIDIA, I had some people that were worried about this stock. There's nothing to really be concerned about here. Yes, you are at the top of the range, but look what you're doing at the top of the range. High, higher high, higher high, higher high. I mean, does the stock need to take a breath? Does it need to absorb some of the energy and some of the gains that it has? Absolutely. Could you have a reversal? Could you fill this gap? Yeah. If you're worried about that, sell the shares. You don't want to see shares of NVIDIA get below probably the $400 level. But the truth is, like, nobody has bought NVIDIA. Look at this volume profile, guys. Here it is. Nobody has bought shares of NVIDIA up here, okay? Everybody bought them down here. And some of you guys are probably sitting there maybe worried or upset that you missed the gains. Guys, just understand with NVIDIA, this is probably the most important thing I'll say to you, probably for the rest of this year, maybe even into next year. Every product that NVIDIA sells is going to go and create another product and another product and another product. Guys, don't worry if you missed out on NVIDIA. Start thinking about what's next. What's next? What is going to be made from the GPUs? Who's going to be able to charge more for their services? More for their services as soon as January. When are they going to take products out of beta and then roll them out into more profitable things? Hello. This is the most obvious thing in the world. I have people that are paying me for the advice, so I can't really make it any more clear than that. But every device that NVIDIA sells is going to make its way into a product. It's going to take months, if not a year, for that to happen. Large language models don't train themselves. Server engineers don't exist all across the world. It takes a while to network these things together, train them, test them, etc., etc., etc. But it's coming. Focus on what is next. Forget about NVIDIA. If you did not buy NVIDIA, forget about it. It's okay. Software is 10 times more scalable, probably 1,000,000 times more scalable than NVIDIA. NVIDIA's earnings could be double what they are now, but they are supply chain constrained. A piece of software can scale instantly. Look at ChatGPT, look at social media, look at the different things out there, guys. That's where the fortunes are going to be made. You could have bought IBM in the 80s, or you could have bought Microsoft. Which one do you think worked out better for you? Think about things right now, and you are going to make a ton of money over the next 12 months. Stop crying if you missed out on NVIDIA. Moving on to Google, looks great. Higher highs, higher lows, consolidation at this area. If you do break lower on Google, you should be buying it. Same thing with Microsoft, is building a base, believe it or not, at these higher highs. Exactly like Apple, you can go and rewind the tape. In fact, I probably should make highlight tapes where I said, well, when Microsoft breaks to the new high, don't worry, it's going to come back and retest those highs. That's what we're doing. A further break on Microsoft is a back the truck up moment. I rarely say that, but if you pull down into the south of 300 on Microsoft anytime soon, it's a back the truck up moment. I don't need to get into more detail than that. And then finally with Tesla, you had like 19 different technical patterns aligning up. If you could not buy a stock like this last week and make 4, 5, 6% in a week, I don't know what your strategy is. Now, I don't know what will happen with Tesla at this point. You did get the bounce. Just because you got the bounce doesn't mean you bounce up here and make new highs, but the bounce happened. Everybody looks at the same charts. I'm not showing you anything here very unique. I just think I do it in a way that is very understandable and easy to follow. Most other people are putting this behind a paywall, or they make you have a $19.99 Patreon to access stuff like this that is just so easy to see. Tesla's got a massive base, as you see here with the volume profile. For Tesla to consolidate and churn in this area certainly makes sense. A much higher move and momentum into Tesla takes you through these thinner areas. When you look at a stock like NVIDIA, when you move through the thinner areas, you can have massive moves upwards. I'm not exactly sure what moves Tesla to those new highs, but chances are that is happening instead of lower highs in the shorter term. Folks, that was Fang Stock Recap Show for Friday. I can't even see right now. August 25th. Got some weird lighting going on in this room. I'll also be filling this room out. It won't look like I'm in a jail cell at some point. We're waiting for the floors to be installed before I bring in all the rest. I'm sure you're very concerned about that, and that has been bothering you. But anyways, hopefully you guys have a great weekend. Leave me a comment down below. Hit that subscribe button. Pound that like or dislike button. I don't really care. Hit one of them, and we'll see you again next Friday. Good luck with your investments.